All right, hi everyone. This is Rifat Al-Mukin, and today I'm going to be solving October November 21 for all those who are interested. So let's not waste any more time. Start doing with them. If you have any question, you can always mail me or you can always comment me. I'll answer you on time. So let's start. I'm going to be solving October November 21, variant 21, variant 1-3 or paper 1-3. So it's an MCQ question. There are 35 of them. So let's start. Starting with question number 1. Question 1 says, why does a trader calculate the profit of his business? Well, a trader more normally calculate profit of a business to measure his business performance, and also to understand how much money he can withdraw. So what are the purpose? Number one, to measure business performance, and number two is to measure how much money he can withdraw. Or withdraw, I mean drawings. Drawings is the money taken by the owner, as you all know, and owner should withdraw only that much money which he made as a profit. So let's look into the options. To calculate interest payable? No. To calculate provision for doubtful debt? No. To know the total expense of the business? No. To know whether drawings are at reasonable level? Definitely. Like, our drawings at reasonable level means an owner should withdraw only that much money which he made profit. For example, if a business makes a profit of $10,000, the owner can make a drawings of 8,000, 9,000, highest 10,000. Withdrawing more than $10,000 is not good. It's not reasonable. Why? Because the business only made $10,000 profit. So drawings of a business or drawings by owner from a business is reasonable only if it's below the net profit. Number two, Hassan is a trader. During the year, he took goods from the business for his own goods. All right, so he took goods. That means he made a goods drawing. How should he record this? Every time there is a goods drawing, it's recorded in a very simple way. Goods drawing reduces the goods purchased. So whenever an owner makes a goods drawing, the amount of goods purchased by the owner decreases. So purchase account is credited and drawings account, as usual, is always debited. The accounts to be debited will be drawings. Accounts to be credited is purchases, B. What were the account, oh sorry, my bad. Where are the accounts of credit supplier maintained? All right, suppliers maintained. All accounts are kept in books called ledgers. As we all know, all customers' account are in one ledger book called sales ledger or trade receivable ledger. That's the new name given to that. All suppliers' account are in another or a separate ledger book called purchase ledger, or the new name is trade payable ledger. So they're talking about suppliers. So it's going to be purchase ledger, 3B. Then, which document does a trader issue to remind a credit customer that payment is due? At the end of every month, we send a document or a statement to all of our customers to remind them about how much they owe us, and also to give them a details about the transaction, the payments they have made, the returns they have made, all the transactions with them for the month, for the year. And that statement is called statement of account. D is the answer. What is a check counterfall used for? What's a check counterfall? In every checkbook, you'll find there is a page which you can tear off, and there's another page left behind with the checkbook. That page left behind with the checkbook is a check counterfall. So whenever we issue a check to someone, we write down the name, the amount, and we give our valid signature. And then we give the check to that person we're supposed to. Then the same details are often written on the page which is attached to the checkbook, which is called check counterfoil. And later at the end of the day, we use that attached page of the checkbook, which is check counterfoil, to record our bank payments, check payments in our cash book. Very simple. So let me be very clear. Whenever we pay check, we write down our check, give the check copy to the person we're supposed to pay, and the details, the same details or similar details are written on a page attached to the checkbook, so that later we look at the check counterfoil page attached to the checkbook to write down or to record our transactions to a bank in the cash book. So let's look at the options. A, to pay a check, no. To pay for goods purchased by check, no. To record a check payment in the cash book, yes. C is the answer. To record a check received in the cash book, no. When we receive check, that check is when we receive check from someone, that check page is basically our source document. But when we pay check to someone from our checkbook, the check page is torn off, given to the person, and the check counterfoil is used to write down the details. So C is the answer. Number 6. Farooq sell goods on credit. A check from Sorry, there was a disruption with my equipment. Let's start again. Farooq sell goods on credit. A check from Khalid, a credit customer, was dishonored by the bank. What should or how should Farooq record this? All right, whenever there is a dishonored check, means we are returning the money. So every time there is a dishonored check, bank account is credited. And to whom are we returning the goods? We are returning it to Khalid. So Khalid's account will be debited. So accounts to be debited, Khalid. Accounts to be credited, bank. C. Number 7. Tumelo sell goods on credit. The terms of trade is listed. List price. List price means selling price. Credit period 60 days means he offer customer to pay their debt within 60 days. Trade discount 15% if 10 units or more are purchased. So anyone who buys more than 10 units receive a 15% trade discount. Cash discount 3% if the debt is paid within 1 month. Okay, fine. Remember, cash discounts and trade discounts are two different things. Trade discount reduces the selling price. Cash discount is normally given to encourage customers to pay on time. A great customer purchased 20 units and paid the debt within 15 days. All right. So what was the total of the invoice? In invoice, we write down total selling price after trade discount. So let's calculate that one, shall we? The customer bought 20 units, as you all can see, and cost of each unit is $200. So 200 into 20, it's going to be $4,000. To that product, which costs $4,000, we're giving a 15% trade discount. So 15% into 4,000 is the trade discount. So 15% of 4,000 is approximately $600, if I'm correct. So 4,000 minus 6,000 is $34,000. This is the selling price or the actual selling price after trade discount. And also this amount is shown in the invoice. So only trade discount is subtracted from the actual price of the product, and the after trade discount price is the amount printed in the invoice. The answer is B. Cash discount is never shown in invoices. Number 8. Jane purchased goods and paid by credit transfer. Okay. How should this be recorded in Jane's accounting record? So Jane purchased goods and paid by credit transfer, means he paid through the bank. So when we purchase goods, our purchase account is debited, and because the payment is made to the bank, for that reason, the money is leaving the bank account is credited. Straight and simple. So accounts to be debited is purchase. Accounts to be credited is bank. The amount is B. The value will be, not the value, the answer will be B, Bangladesh. Number 9, what is shown in a trial balance? Basically, what does trial balance show? Capital and profit at a particular date? No. Financial transaction for a particular period? No, it doesn't show any transaction. Trial balance basically shows all the closing balances of all the accounts of a business at a particular date. Ledger balances on a particular date. That's what I just said. C is the answer. D. Number 10. Sorry, 9 answer will be C. 10, look into number 10. 10 is quite hard, by the way. So I would like to request you all to give a star mark to number 10. Make sure you all go through number 10 before the exam. At the end of each year, PT Limited transfers 20% of the profit for the year to general reserve. Draft financial statement were prepared. Draft financial statement means that particular income statement which isn't totally correct. It has some mistakes. It was then discovered that inventory had been overstated by $1,500. That's a very important mistake, which is overstated by $1,500. Which effects did the correction of this error have on retained earning and general reserve? So effect on retained earning basically means balance CD of retained earning or closing balance of retained earning. And effect on general reserve means how much the general reserve will increase or decrease, because whatever profit we make, a portion for this one, 20% of it goes to general reserve. Now look into this one. First of all, closing inventory. Let me give you a small flow chart which might help you out. Closing inventory. Closing inventory is always subtracted in cost of sales to figure out cost of sales. So if closing inventory decreases, the negative value decreases, then cost of sales definitely increases. If cost of sales increases, then gross profit decreases. If gross profit decreases, then net profit will also decrease. Therefore, since closing inventory was overstated by $1,500, means overstate means we wrote $1,500 in excess. So closing inventory has been overvalued. Now, if we have overvalued closing inventory by $1,500, we have to undervalue it, or we have to lower the value by $1,500. So since closing inventory is overstated or overvalued by $1,500, it should decrease. It has to be decreased by $1,500. If closing inventory decreases by $1,500, to correct this error, cost of sales will increase by $1,500. If cost of sales increases by $1,500, gross profit will decrease by $1,500. If gross profit decreases by $1,500, net profit will also decrease by $1,500. So in order to correct this error, or after correcting this error, net profit will decrease by $1,500. That is the first stand we have to make. Then from this net profit, 20% is transferred to general reserves, as that's what the question says, and the remaining 80% is left to the business, or left as retained earnings. Since net profit is decreasing by $1,500, so general reserve will definitely decrease by 20% of $1,500, $300, because general reserve transfers are dependent on net profit. And since net profit decreased by $1,500 and 80% of profit is in retained earnings, so since net profit decreased by $1,500, 80% of it will also decrease the retained earning. Because again, let me repeat, retained earning is 80% of $1,500, which is $1,200. So what we can see here is general reserve is decreasing by 300. So decrease 300. And retained earning is also decreasing by 1,200. So decrease 300, decrease 1,200. B is the answer. This particular MCQ was quite hard and it's quite new, and it never came before that or in previous years. Number 11. The bank column in trader's cash book and the bank statement both showed a positive balance. The comparison revealed the following differences. Uncreated check, that means uncreated deposit. Bank charges not included in the cash book. This is a mistake in the cash book. What was the difference between the balance on in the bank column of the cash book that's shown in the bank statement? Basically, they want you to know that due to these two mistakes, what's the difference between the balance in the cash book and the balance in the bank statement? So let's do a bank reconciliation statement, shall we? Now, if we try to do a bank reconciliation statement, it will start with balance as per bank statement, obviously. Let's consider that amount X. And from balance in the bank reconciliation statement, if we start with balance as per bank statement, we add uncredited deposit and often subtract unpresented check. So we have an uncredited deposit of $200. There is no unpresented check, and this will give us balance as per updated cash. Whatever that balance is, for example, is a Y. From there, we have to subtract $10. Why $10? Because bank charges was not subtracted from the cash book or not recorded in the cash book yet. So what we can see over here, try to focus, you'll understand. Our bank statement balance is technically less than that of cash book balance. Let's do a simple math here. From here, we can do a very simple equation, which is X, which is the balance as per bank statement, plus 200 equals to Y minus 10. Keeping X, which is balance as per bank statement, on the left side, will give you Y minus 10 minus 210. So X balance as per bank statement equals to Y minus, sorry, not 210, it's going to be 200, minus 210. X is the bank statement, Y is the cash book balance. Now, if we subtract $210 from the cash book, only then we get our bank statement balance. So from this equation, we can interpret that the balance on the bank statement is less than that of cash book. Why less than that of cash book? Because as you can see, we have to subtract minus 210. That's why. Therefore, we can say the bank statement balance is lower than the cash book. By what amount? By 210. So what we can write, the cash book balance was higher than the cash book, than the bank statement balance. Definitely C is the answer. Try to go through the equation properly. We first did a bank reconciliation. Then we found an equation where we figured out that the bank balance, according to the bank statement, is $210 less than that of cash book. So bank balance is lower than the cash book. That is, cash book balance is higher than the bank statement. Number 12. What is a reason for preparing sales ledger control account? We normally prepare sales ledger control account to summarize the accounts of all the trade receivables. Number 13. Two companies each purchased motor vehicle at the beginning of year one. Company G used straight line method at 15%. Company H used reducing balance method at 20%. What was the difference in depreciation? What was the difference in the depreciation charge between the two companies for year two? All right, so let's figure out depreciation of this motor vehicle for both the companies for year one first, year two second. Let's start. So first is company G. Depreciation of company G for year one will be 15% of 10,000, 1,500. For year two, 15% of 10,000, 1,500. For company H, it's 20% into cost, which is 10,000. That gives you $2,000. 20% of 10,000 minus 2,000, $1,600. And as you can see, for year two, company's H depreciation is more than that of company G, and by what amount? $100. 1,600 minus $1,500. So depreciation for company H is $100 greater than that of G. So $100 greater for H. B is the answer. Number 14. Amit's financial year ends on 31st December. The following account prepared in his sales ledger. All right. What does the entry on 21st November represent? This particular entry. What does it represent? First of all, this is not a balance CD or closing balance because it's not on 30th November or it's not on end of the month or year. That's why. Second, he already paid in cash. He already paid in bank in June. And we don't find any other reason why this can be a credit entry apart from a bad debt. This will not be considered discount allowed or received either because the amount, the question mark isn't given after a payment. Like normally if a customer pays us, only then we give him a cash discount. But over here, it's straight on 1270 question mark. And after 21st November 1270, there is no balance BD either. and we don't think that it doesn't show that it's a payment. If it was a payment, then they would have mentioned it. So it's a question mark, 1270. So it's obviously a bad debt. It's not a balance carried down. It's not a discount allowed because there is no other payment made on 21st November. Bad debt recovery? No, recovery is nowhere close to this question. It's definitely an irrecoverable debt or a bad debt. Number 15. Sally wished to increase the balance on the provision for doubtful debt at the end of the year. How should this be recorded? Whenever there is an increase in provision for doubtful debt, try to remember the format. Whenever there is an increase in provision for doubtful debt, income statement is debited and provision for doubtful debt is credited. So amount to be credited, provision for doubtful debt, income statement debited. A is the right answer. 16. The following errors were found after a statement of financial position had been prepared. A loan repayable in 2 years' time had been included in the current liability. This loan was supposed to be a non-current liability. A provision for doubtful debt should be treated. What is the effect of correcting this error? Okay, if we correct the first error, then our current liability will decrease, non-current liability will increase. First thing first. And whenever we bring in provision for doubtful debt, if you all remember, provision for doubtful debt decreases trade receivables. And when trade receivable decreases, current asset also decreases. So due to correction of this error, our current asset is decreasing, decrease. Current liabilities is also decreasing, decrease. C and D won't be the answer for sure. Non-current liability is increasing. And then owner's equity. Owner's equity is equals to capital. And let me give you a very simple shortcut. You don't have to go through the equation and all the thoughts of whether assets are increasing or liabilities are decreasing. You don't have to go through any of this. Just remember, any effect on net profit equals to effect on capital. Provision for doubtful debt is an expense. When provision for doubtful debt is created or increases, expense increases. When expense increases, when provision for doubtful debt, I call that in short PDD, increases, expense increases. When expense increases, net profit decreases. If net profit decreases, always remember capital or equity will also decrease. You have to go through all the hurdles of like going to the equation of asset minus liability. No need. So since provision for doubtful debt is an expense, rising or creating a provision for doubtful debt is increasing expense and decreasing net profit. Therefore, owner's capital will also decrease. A is the right answer. Number 17. John maintains a full set of accounting records. Why does he also prepare a statement of financial position? Why do we prepare? A statement of financial position? Mainly to summarize our assets and liabilities, nothing else. So option A, to calculate profit? No. To check if assets equal capital plus liabilities? No. To show the transactions which took place during the year? No. To summarize what the business owns and what it owes. Owns means assets, owes are liabilities. So financial position is mainly done to summarize assets and liabilities of a business. B is the answer. Number 18. What are the advantages of operating a sole trader? What are the advantages? Number one, the owner can keep all the profit, definitely. Number two, the owner can raise finance by issuing debentures. No, that can be done by a public limited company only. The owner can make decisions independently, definitely. The owner is protected by limited liability. No, 1 and 3. A is the answer. Number 19. Anwar is a sole trader making annual profits of $24,000. He decides to admit Dilip as a partner. They agree that Anwar would receive a salary and profits and losses would be shared equally. They agree that Anwar would receive a salary and profits and losses would be shared equally. The forecasted appropriation account for the partnership first year trading is given. Okay. How much will Anwar's total income increase? They are going to share their profit equally. So the residual profit, $40,000, will be distributed equally between Anwar and Dilip. So they want to know how much will Anwar's total income increase. In order to find Anwar's total income, we have to subtract Anwar's new income from his old income. Anwar's old income was $24,000 and Anwar's new income will be calculated on the right side. Anwar's new income includes his salary from the partnership and his share of profit, 20,000. Add them up, 30,000. So Anwar's new income is $30,000. Therefore, the increased amount is $6,000. B. Kasi and Ravi are in partnership. The financial statement for the year ended 31st August 2021 showed that Ravi was entitled to an interest on capital and interest on loan and was charged interest on drawings. Which entries would be made in the Ravi's current account? Interest on capital is always created in the current account. So it's going to be created. A and B is eliminated. Interest on loan is also created in the current account. Interest on drawings is debited in the current account. So answer is C. Number 21. BCD Limited provided the following information: ordinary shares, retained earnings, debentures. How much was the equity and capital employed? Equity means, as we all know, capital. Capital employed stands for equity or capital plus non-current liability. But equity for a limited company comprises of all the share capital and reserves. So if you add them up, 300,000 plus 200,000, that will give you $500,000, and capital employed will be the equity, which we just figured out, 500,000 plus the non-current liability, 170,000, 670,000. D is the answer. Number 22. Issued share capital of CD Limited consists of ordinary shares. Retained earnings were $86,000 on 1st January. This is the balance BD. And $88,500 on 31st August. That's the balance CD. The company made a profit of $26,000 and made a transfer to general reserve $5,000. What was the total ordinary dividend? Now, let me remind you something. Normally, retained earning at year end, which is the balance CD, is often equals to retained earnings at the beginning of the year plus any profit that we make is added because net profit increases. Retained earnings minus any transfer to reserves minus dividends. That is what always happens in changes in equity. Now put the values. Retained earning balance CD. Closing retained earning is 88,500 equals to retained earning BD. Opening or retained earning at the beginning of the year is 86,000 plus net profit. The profit made is 26,000 minus transfer. Transfer to reserves are 5,000 minus dividend. This dividend is what the question is looking for. Now, how can we find dividend? Bring the dividend D, in short, we call that D, on the left side, on the left-hand side of the equation, and keep everything else on the right-hand side of the equation. 86,000 plus 26,000 minus 5,000. This one, 88,500, is brought to the right-hand side of the equation. 88,500. And that will give you the answer. $18,500. A. A sports club was formed on 1st August. During the year, the club purchased equipment costing $5,000 paid by check. In which of the club's financial statement will this appear? First of all, it's paid by check. So it will definitely appear in receipts and payment account, C&D cost of. Equipment is a non-current asset. It's not an expense. So it will not appear in the income expenditure account, but over here there's a tick. So A is the wrong answer. Statement of financial position. Statement of financial position shows all the assets and liabilities. It is an asset, so this will be shown. All correct is B. 24. What is not part of the prime cost of a manufacturing business? Prime costs are all the variable cost of the factory. What is not? They said what is not. So we'll go through the options. Whichever is not a prime cost, will that be the right answer? So wages of factory supervisor. Wages of supervisors are fixed and it's an overhead. Number 25. The value of Theto's, what's the name? Theto's work in progress increased during the year. That means closing work in progress is more than the opening work in progress. WIP means work in progress, O for opening, C for closing. This was recorded in the financial statement. How did this affect cost of production, cost of sales? All right, now if we look into a manufacturing account where we calculate our manufacturing cost, prime cost is initially written all the time. Then we add our overhead. From overhead, we add opening work in progress and subtract closing work in progress to figure out production cost. Straight and simple. Question says, work in progress increased during the year. That means closing work in progress is more than the opening work in progress. Closing work in progress is always subtracted. If that increases, then cost of production decreases. So cost of production decreases. If cost of production decreases, this cost of production is within cost of sales. Cost of sales will also decrease. Answer is A. Because inside cost of sales of our manufacturing business, we do write opening inventory, then production cost, then purchase of finished goods. If production cost decreases, cost of sales will also decrease. Number 26. What are the advantages of keeping a full set of accounting records? All right, what are the advantages? Let's go through them. Number 1, financial statement will be free from errors. No, it doesn't ensure error-free entries. It is impossible to make fraudulent entries. It is possible to make fraudulent entries. You don't have to say that. More informed decision making, definitely, since everything is properly written. Calculation of profit is more accurate. Yes, more accurate, not error-free, more accurate. 3 and 4 is the answer. Beth provided the following information. Her drawings during the year amounted to 3,000. Right, net asset. Asset means capital. So this one is opening capital, and net asset of 31st December is closing capital. And over here we have drawings. What was Beth's profit for the year? Whenever you will see questions like this, where the opening capital is given, closing capital is given, try to do the finance by section of your financial position. Normally, the financed by section of your financial position often looks like this. Opening capital plus net profit for the year minus drawings divided by closing capital. We all know opening capital is, according to the question, 28,000. Net profit, that is something we have to figure out since the question says find net profit. NP. Drawings is given $3,000. Closing capital is given $24,000. From here, we can form an equation. 28,000 plus net profit minus 3,000 will give you 24,000. So net profit will be 24,000 plus 3,000 minus 28,000. The answer will be minus 1,000. This minus indicates it's a loss. 27A. 28. Roshan sales for his first year of trading were 55,000. His gross profit was 20% and closing inventory was 3,200. What were the purchase for the year? All right. We have to do a lot of reverse math here. First of all, sales are given, margin is given. We all know that gross margin is equals to gross profit divided by sales into 100, which is 20% according to the question. So we can write gross profit divided by sales into 100 equals to 20%. So your gross profit will be 20 by 100 into 55,000. And that will give you a gross profit of 11,000. We all know gross profit equals to sales minus cost of sales. So our cost of sales will be sales minus gross profit. Sales is 55,000, gross profit is 11,000. That will give you $44,000. All right, so we figured out our cost of sales. Great. So I'm going to do math over here. We all know, I'm going to use a blue marker for all of you to understand them properly. We all know cost of sales is equals to opening inventory plus purchase minus closing inventory. CI stands for closing inventory. I'm just doing these shortcuts to make space. Cost of sales is something we already know. $44,000. Opening inventory is 0 because this is the first year of trading, and at the first year of every business, opening inventories are 0. Plus purchases, which we have to figure out, minus closing inventory, 3,200. Therefore, we can say purchase equals to 44,000 minus 3,200. That will give you, sorry, plus 3,200. That will give you $47,200. So 28D. 29. Which information is required to calculate capital employed? Formula for capital employed is operating profit divided by capital employed. Capital employed is capital plus non-current liability. Therefore, option A, gross profit, no. B, no. C, yes. Non-current liability, yes. Owner's capital, yes. C is the answer. For D, operating profit is fine, non-current liability is fine, working capital is not part of the formula, will not be written. Number 30. What is the best indicator of the liquidity of a business? Is none other than liquid ratio. A trader provided the following information. What was the trade payable turnover days? We all know trade payable turnover days formula is trade payable divided by credit purchase into 365. So we need to find the trade payable of 31st May at year end, which is $42,000 divided by trade purchase into 365. That will give you approximately 48 days. 32. A business provided the following information about its gross margin. Year 1, year 2, year 3. What we can see, gross margin is decreasing. When does gross margin decreases? Gross margin decreases when, number 1, profit. Gross margin decreases, sorry, my bad, when profit per unit of a good decreases. When profit per unit of a good decreases. Profit per unit from a good decreases when, number 1, selling price decreases, or number 2, cost price increases. Now look at the option. What could explain the changes in gross margin? Cost of sales decreasing. Cost of sales means cost price. Decreasing? No, it has to increase. A is not the answer. Expenses are decreasing. Expenses doesn't affect gross profit or gross margin. Quantity of goods sold is decreasing. Quantity doesn't affect gross margin because it's about per unit profit. Selling price is decreasing, definitely. D is the answer. 33. What is not a limitation of interfirm comparison? All right. Number 1, accounting records do not include skills of the workforce. This is a limitation. but the question asks for not a limitation. Business may have different accounting policies, definitely. Business may have different depreciation policy, different doubtful debt policy. So that's also a limitation. Business may have different sales price. No, that's not a limitation. Sales price can be different. It's not a limitation. Samsung and Apple, they have different sale prices. They have different selling prices. That's not a limitation. But their policies, they have different policies. They have different depreciation policy. They have different accounting treatment policies for which you can't compare these two companies together. So that's a limitation. Number D, the available information may not relate to a typical year. Yes, that is also a limitation. 34. What would a supplier be interested in the financial statement of a great customer? A supplier is always worried and interested about whether the business or whether his or her customer is able to pay on time or not. I repeat, whether he or she is able to pay on time or not. The seller or supplier is never worried about the profit you are making, the customer, the profit of the customer he or she is making. If you're able to pay me on time, I'll give you the money. I'll give you the product. So number A, to know if the customer can pay what he owes, definitely A is the answer. What does the objective of understandability assume users of financial position statement will possess? The objective of understandability always assumes that the users, whoever is going to use or read the financial statement, will have some minimum or will have minimum knowledge of accounting. So A is the answer, a reasonable knowledge of accounting. So that's all for today. If you have liked my video, do give a thumbs up, do subscribe to my channel, and I'll be sharing more MCQ video very soon. If you have any request for any specific lecture or any specific solution, or if you want me to solve any other question, do comment me. Inshallah, I'll do that. That's Rifat Al Mukin, signing off from Bangladesh.